Okay, let's get right into it. While most people are just thinking about the next few months, the smartest folks in the room, they're already looking ahead to the end of 2025. There is a massive, time-sensitive financial shift coming our way, and believe me, this isn't just about flipping a calendar page. This is about a fundamental change in the rules of the game.
And let's be crystal clear about this. January 1st, 2026, it's not just another New Year's Day. For all intents and purposes, it is a financial cliff. The tax laws that have governed your money for years are about to change, and if you're not prepared, doing nothing will have a real, tangible cost. The stakes are incredibly high. So what's actually happening here? Well, back in 2018, the Tax Cuts and Jobs Act, you probably heard it called the TCJ, it lowered income tax rates for millions of us. But here's the kicker, the detail that almost everyone forgets. Those tax cuts were never permanent. They came with a built-in expiration date. On December 31st, 2025, they sunset. They just go away. And the very next day, we snap right back to the older, higher tax rates.
And that brings us to the whole point of this explainer, the 2026 financial sunset. And I call this a use it or lose it moment for a reason. The favorable tax environment we're in right now, think of it as a resource that's running out. The decisions you make, or more importantly, the ones you don't make, over these next several months will echo in your bank account for years.
So what do we do about it? Let's talk strategy. Your first, and honestly your most urgent move, has to be a proactive one on the tax front. You have a limited time window to use the current laws to your advantage, to potentially save a fortune on your future taxes.
The key play here is something called a Roth conversion. Now, don't let the term scare you. It's simple. You're basically moving money from a traditional pre-tax account, like an IRA or 401k, into a Roth account. Now, the catch is you have to pay income taxes on that money now, at today's lower rates. Why would you do that? Because then it gets to grow and be withdrawn in your retirement 100% tax-free. And this right here shows you why it's such a brilliant move. It's a strategic choice. You can either pay your taxes now at a known lower rate, or you can roll the dice and pay whatever the potentially much higher unknown rate is down the road. You're choosing between a sure thing and a total gamble. I tell my clients to think of it this way. You're essentially buying your future tax freedom, and right now it's on sale. But like any good sale, it's not going to last forever. It ends, you guessed it, December 31st, 2025. After that, the price goes up. All right, so let's shift gears. We've talked about the big picture tax strategy. Now let's get down to the ground level. It's time for what I call a critical inflation audit. The inflation we've all been dealing with has probably changed your spending habits in ways you haven't even noticed. We need to figure out where your money is really going. See, for almost everybody, about 70% of all spending falls into just three buckets: housing, transportation, and food. We call them the big three. You can spend all day trying to save a few bucks by canceling a streaming service, but if you want to make a real, meaningful dent, this is where you have to look. Okay, so here's your action plan. For housing, if you're a renter, start looking at comparable listings now. Winter is prime time for negotiation. For food, I want you to do something that might feel a little old school. Print out your last 3 months of bank statements and get a highlighter. Mark every single purchase related to food. The goal isn't to make you feel bad, it's to get data. You're looking for what I call the convenience tax, that extra money you're paying for DoorDash, Uber Eats, and the like.
And that's really the whole point. Most budgets don't just break, they leak. They drip, drip, drip money away in these silent $20 transactions. An audit like this is the only way to find those leaks and finally plug the holes.
Now that we've started plugging the leaks in your cash flow, let's zoom back out. Because now that you have a much better idea of where your money is going, we can figure out where you are right now. Think about it. You can't map out a route to where you want to go if you don't even know your starting point. Your personal financial GPS runs on one simple but incredibly powerful formula. Assets minus liabilities equals your net worth. Your assets are all the things you own: cash, investments, your car, your house. Your liabilities are everything you owe: a mortgage, car loan, student debt. That final number, the difference between the two, that's your true financial position. So, this is your next piece of homework. What is your number? Before you can build any sort of plan for 2026, you have to know this figure.
This is your ground zero. This is your starting line.
Okay, once we have that number, our baseline, we get to move from the what to the why. We go beyond the spreadsheets and the numbers to figure out the real purpose behind all of this. This is about setting a clear intention that's going to guide every single financial choice you make from here on out. And the process for this is just beautifully simple. First, you're going to choose one single word that defines what you want your money to do for you. Think of words like stability, or maybe scale, or even peace. Then that word becomes your new filter. Before you make any big money move, you just have to ask yourself one question. Does this align with my word?
And this is how it works in the real world. It's incredibly effective. I mean, if your word is stability, you just know that gambling on some crypto meme coin is completely off the table. And if your word is scale, you recognize that letting 50 grand just sit in a checking account earning nothing is actively working against your goal. See? That one word brings instant clarity. So this is where we'll leave it. We've gone through the tax strategy, the spending audit, calculating your net worth, but honestly, none of that means anything without a why behind it. All the tactics in the world are useless without a clear intention. So I'll leave you with one final question that only you can answer. What is your word for 2026?